Hello, hello everyone. It's me again. Let's turn off my speakers just in case. So we have a lot of interesting stuff today, but I guess this is the big one today about Sharesight. Instant! Good to have you on the live stream. Thank you very much for coming in. Bradley, what's up, man? Good to have you back on the live stream once again. Jordan, good to have you on the live stream as well. Let's just wait for just a bit more people to rock into the live stream. I'm excited to kind of bring this out to everyone about Sharesight. I've been talking with their marketing team for a wee while now. Had some talks, and I think we're on the same page on what we think investors need in New Zealand. So this affiliation just happened. I'll probably send them a link of this live stream later as well. But I'll probably make like how to use Sharesight. I don't know, like a more official video, not a live stream about it, maybe a bit later in the future. But right now, I'll kind of introduce the Sharesight and what you guys can benefit out of the affiliation link I have for you guys. So yeah, there's a few good things that's happening in there. So let me just bring up that email again, just so I'm not making anything up. I do want to make it pretty clear. So basically, if you use the affiliation link in the below, pretty much you guys get 4 months for free. And yeah, it's a win-win because I make a bit of money and you guys get 4 months for free on an annual subscription. So it's pretty good. Yeah. So it's really good for anyone who really wants a nice, clean kind of portfolio tracker. I know there's like Excel sheets out there, but this is just on a different level. They also do like taxes for you if you're not really the tax person. There's a lot of good things about it, which we can kind of talk about as well. If the audio is not that good, just let me know. I'll fix that. I've been moving my mic around in my settings for the mic recently, so I don't know how well it's going to be, but maybe it was a bit too loud. I'm not sure. I have reduced the volume a bit. If it's a problem, just let me know. Oh, did you put a... Hey Gretchen, good to have you on the live stream. Jordan, are you moving from Sharesies? No, I mean, so Sharesies is a investing, what do you call it? Investing platforms, right? So it's like a middle broker for you to buy shares from, where Sharesight is not like that. Sharesight is completely different. You don't buy and sell stocks or funds from Sharesight. You are pretty much, it's like an insights over your portfolio, and which you can they have integrations with Hatch already, so you can connect your Hatch account to it. Or if you use Sharesies, you do have to kind of manually update your portfolio. I'll kind of go into what Sharesight is kind of about, and we can talk more about it after, but I just want to do it when there's a bit more people, just so I don't have to repeat too much things, because I don't want to spend like a huge amount of time on Sharesight when I don't like know how to use it properly myself. So I've kind of looked through it, and I looked at through the features, and the senior marketer there, she has gone through like a demo with me, and it's for me, this live stream is for me to introduce it to you guys, you know, provide the affiliation link, and also kind of go from there. And if you guys want me to look into certain things, I can, because they've given me premium access to the Sharesight platform for my account, so I can literally look into anything I want that they provide, and they have a lot of interesting stuff in there. So it's completely different from Sharesies. It's not an investment platform. It's a way to track your portfolio and do tax reports and FIF tax reports and a lot of things like that. So it's a completely different thing. So just know that. Give me a second. Ah, Leanne, sorry I didn't look at the comments recently. I was kind of busy for the past few days, so I didn't get there. Yeah, sorry about that. But what are your thoughts on the BB report? I haven't looked into the BB report just yet. So wait, it was April, May, June. So did the BB report come out already? BB report, BlackBerry report. I don't know they already had something out. Okay. Earnings report, right. Wait, so would that come out here? Let's see. So I wonder if it has been reflected here. May 31st. May 31st. Oh, Feb, May. Okay, alright, alright. It's okay. So it's recovering, right? So the earnings is definitely a lot better now, right? And that's looking pretty good so far. And you know, BlackBerry, it's got a lot of good things going on with it. Yeah, I think that's pretty good. Like they're just stabilizing their kind of earnings and their revenues and stuff like that. I don't think I still want to see some of those Facebook things coming in. I don't know if it's been reflected in that, but yeah, equity is kind of settling down a bit. It's like it's not going down like crazy anymore, and the depth is just the same as always. That's fine. Having depth right now is totally fine as long as they use it properly for growth. Yeah. Other than that, it doesn't look like much changed, but I do like that earnings kind of being reflected as a bit more, you know, a bit more positively. Like we've seen earnings kind of increase, but the revenue is still kind of like it hasn't improved much. But I don't think the revenue for BlackBerry is gonna improve too much to me until like maybe a lot later in the process where they start to actually utilize the IV and the QNX platforms and provide it to a wide number of people. I think that's when the revenue will start going up like crazy. But until that time comes, like I don't think BlackBerry is going to have a huge revenue bump anytime soon. Yeah, they're stabilizing. I think it's a good time for them to grow and stabilize on what they want to do and find a direction and just hit with it. And I think they're they got a really good CEO. I think I personally do like their CEO, John Chen. So he's going to be a pretty good driver towards what BlackBerry is going to be for the future. And we already know it's not a smartphone company. So yeah, the earnings report is still okay. It's not. It's kind of like rock bottom already. So I don't think they can go any worse than this. I think they just need to stabilize and gonna kick off back to the upstream. So let's hope that happens sometime soon. So yeah. So I hope that answers your question, Leanne. Good to have you on the live stream. Sorry if I can't pronounce your name. Jotika? Okay, so Jotika. I am wondering why we can't trade Baba on Sharesies. I think it's just because Sharesies don't have it on. They just don't have it because remember Sharesies don't. I think they can somewhat pick what shares you can buy based on what the broker provides Sharesies. For example, if the broker oh no. So if the broker they use for the US stock market is someone called Drive Wealth, I think. So these guys probably either don't list it or Sharesies just not opting into listing Baba on Sharesies, and I'm not sure which one it is. Let me just try look for it. So for example, if I go to Hatch. So I have a little Hatch account, right? Alright, so I have a Hatch account. Just put it down here. So in my Hatch account, if I look for Alibaba, because I think Hatch, Stake, and Sharesies, they all use Drive Wealth for what I know, and Alibaba. Okay, so Hatch has Alibaba, so that's fine. Oh, it jumped. That's pretty nice. That's a nice little jump there. Anyways, but yeah, yeah. I guess it's just Sharesies not wanting to list it. I'm not quite sure what's happening here, but yeah, it is kind of sad that you won't be able to find Alibaba on Sharesies. Yeah. Not sure why. You should actually ask them. So you can, you know, when you don't know something, just go here, flick a message to them, and be like, "Hello guys, Hatch has Alibaba. Why don't you guys have Hatch?" Like they'll probably give you a better answer than I could, but I think they're just opting not to. They could kind of pick on the shares they list on Sharesies. I don't think they give every single stock available to us. When the Drive Wealth gives these kind of availabilities to Sharesies. So hope that kind of makes sense. Yeah. Bradley, are you still thinking of adding some NZ investments? I'm slowly thinking. So I think I've showed you guys this before. So this is my watch list in Sharesies, right? So in Sharesies, these are this is the things I'm looking at. I've kind of made some investments in Third Age Health on my sister's account. Remember, guys, I use my sister's account as like an experimental account, kind of. So for that reason, I've kind of bought this one. It's like a good potential dividend stock, but I think the revenue can go up still a lot, or I don't know. I think they can. First of all, I think they could be a really good dividend stock. The kind of services they do is like aged residential care, and I think that's going to be very important for the coming years, especially with the aging population. Of course, New Zealand loves taking care of the elderly here, so yeah, so I think this is going to be a pretty good market to be in. So I've kind of did that. I don't know if I'll make my own contributions myself on my account, but we'll have to look into it, because remember, guys, I think you guys mostly know that I don't like making small contributions in a lot of companies. I'd rather put a lot of money into a few companies and kind of ride those, because at the end, it's not about spreading your money so much that you over diversify. You guys know I don't like over diversifying. Diversification only works well when you actually do the research and you believe in the company and you put a decent amount of money at least. I don't like doing like $5 and like 100 companies and whatnot. It's not really my kind of style, and it's not really good. If you want to do that, just buy a fund. Don't just buy it yourself. I think it's quite useless. So I'll have to think about which NZ stock I want to put in. Like Raycon is something I wanted to kind of put in as well. Sika is also quite a like potentially growth company as well. Oceania is something that could be a really good growth company as well. Heartland Group, maybe, I don't know. I think they might consolidate from this range, but that's still not sure of. Hallenstein's also just a dividend stock. You guys know I don't feel the need to go into a dividend stock just at this point in time. I'd rather risk it a bit more and go more towards growth, because I don't have that much capital in Sharesies. You guys know, like $20,000 is not when I want to start dividend investing. I kind of want to start dividend investing once I have more than like 50k or maybe even 100k in stocks. That's when I would actually start putting a bit of money towards dividends, because you know, dividends are nice. It's good, especially when you know the stock market is gonna be then dividends are good. And for that reason, you know, people can go dividend investing right now, and it's completely viable, because when you don't have much confidence in the stock market, that means the stock price will kind of drop over time. And during that kind of bear market, the ones that still pay you out on pretty good dividends is dividend companies, right? So they pay you out regardless of the stock price going up or down, and normally you keep them for a long term. And it's not something I want to go into just yet. Eventually, I think I will go into dividend investing, so we'll look into that. Enterprise, another small cap that I've kind of looked into. It's been growing like crazy since I started to look into it, but I'm not sure if I'm just gonna FOMO in. Probably not. I don't know. Maybe I should FOMO in. I don't know. Maybe just $1,000 FOMO. A2 Milk is also something I'm quite interested in. I still think they're quite undervalued compared to what they can be. The Daigo channel did them pretty badly, but I think they could go from there. Okay, so I think I got enough viewers on the live stream now. So let me just talk about the Sharesight, and I'm going to go through the Sharesight platform and what it means to you guys and what it means to me and how we can kind of utilize it. Once again, I don't know much about it just yet, but I think it's going to be a good kind of starting point for a lot of people. Like, for example, we got those Excel sheets, right? So let me try find that Excel sheet. I think Josh Wang had the Excel sheet as well, right? So it's like, see? So this is the Excel sheet, right? But, you know, like a lot of people might be like, do I really want to keep track of this Excel sheet? It's like, that's the thing, right? Like, I don't know, like, for a lot of people, this is very, very overwhelming, and this is where Sharesight comes in, because it makes it a lot easier. Of course, I don't think they show you like daily moving average. I'm not sure. Let's see about it. But yeah, these are all numbers. So people who like Excel sheets, you can look at this, but this is different. So if you want to look into Sharesight, and after I talk about Sharesight, if you guys want to kind of try it out or even go for an annual subscription, try look for sharesight.com, NZ till 7 figures, and I guess from there you'll be able to see exactly what you can get out of it. So when you land it, yeah, so sharesight.com/till 7 figures, and you'll find it right there. I think it's all the same, Elias. So basically you guys get 4 months free when you go through my affiliation, and you just press this, and I think it goes through the registration process with you. So before I get onto the chat again, I'm going to just talk about this real quick, because I guess this was kind of like the introduction I wanted to make to the live stream, of course, because yeah, it's important for me. It's kind of like a milestone for me. I never really had an affiliation with anyone. I'm pretty picky about who I affiliate myself with, because I don't want to, you know, for example, I got a few for maybe like cryptocurrency, but I don't really want to go to that space just yet. And also I don't talk about much about crypto in my video, so maybe not that. But Sharesight is something that I kind of believe in. So I used Sharesight before they reached out to me. They reached out to me through my YouTube channel and to my Instagram. So yeah, I've been using this. The only problem with me is that because I use Sharesies, if I buy or sell Sharesies, it's like, for example, oh yeah, I'll show you what I do. So basically, if you have Hatch, I think there's an integration with them. So you can, for example, if I buy and sell in Hatch, then it will automatically show up in Sharesight. Well, that's what I understand from it. But for Sharesies, there is no integration at the moment. It's up to Sharesies to create an integration with Sharesight API and create that connection. So if you guys really think Sharesight is going to be really useful for a lot of Sharesies and Sharesies users, then just hit Sharesies up. Just keep messaging them. When are you going to Sharesight integrate with Sharesight and whatnot? And maybe if they have enough people, they'll raise the priority on getting that kind of integration done. But basically, I made a small contribution on BlackBerry just with my referral money. So I made 17. So this is the recent one I made like a few days ago on Friday, I think. So let's try put this. So for example, if I go here, and who's keep messaging me? Okay, so if I go to BlackBerry and I go into new trade, what is it? I have 1.13 shares price. I made this on the 25th. Oh, right. So I made this. I bought this much shares of BlackBerry at a price of 13.26. Obviously, like if invest a lot, then you just got more manual stuff to do. But most people kind of put like lots of money at once, I guess. I don't know, like, so bulk trading and day traders, if they don't have an integration, it'll be pretty annoying for them to keep filling this out. But I don't think this platform is made for day traders. It's for people who hodl, people who are looking at investment as a long-term thing rather than a short-term thing. So that's the important thing there. Okay, cool. So they kind of give me the exchange rate for the day I bought it. It might not be accurate, but that's not the important stuff. It's just, this is the important stuff and how much brokerage. And I guess this is where it looks like. So once we do that, we save trade. And you can see it shows you everything. So the really nice stuff about this kind of graph and all these kind of things is that it shows you, you can compare it to different benchmarks. Like for example, I told you you shouldn't be investing in individual stocks if you consistently for like years and years and years performing less than the fund. Of course, if you have a low risk part of your portfolio and you want to keep it somewhat consistent, you can buy a bit of fund and you can buy a bit of low risk ones and also do a bit of stock trading on top of your kind of base passive investment, let's say, like funds. But for example, if I want to see how I'm tracking compared to NZ Top 50, obviously my BlackBerry was a roller coaster ride, so it's not doing too well compared to the NZ Top 50. But maybe I should just cry. Maybe I should just stop doing stocks. That's okay. But growth investment is something a bit different. You're in it for the risk, so that's fine. So you can see that the trade I just put in, it shows up right here, and it shows you the things I put in and the value that you would have used, and it shows you how much currency gain. So the interesting thing is that, remember, when you are investing in overseas investments, it's not just the stock price that goes up or down, it's also the currency exchange rate. Because I buy US stocks does not mean when I want to cash out or something, I'm going to be getting it in US dollars, unless you want to put it into US dollars. But most likely you would probably get it back in New Zealand dollars if you're in New Zealand. And the thing is that exchange rate is very important, and that's why some people say it's a good time to exchange a bit of money into USD and back to NZD, depending on where the exchange rate is, because that also kind of gives you an edge. So when the exchange rate is bad, then it gives you less incentive to go for overseas investments, because even if you make an increase in that, if the exchange rate gets wrecked, then it eats into your profits, right? Because the currency loss is affecting the kind of total profit you made out of your stock price increase. So there's a lot of things you can do with it. I mean, I guess the really important stuff is that these stuff is free, so you can kind of use this. You can see like there's a lot of good things. So you can even make something called custom groupings. There's something they've been focusing on. So you can group custom. So it's pretty simple concept. You create a category. So you create a category. You create like for example, I have US stonks and NZ stonks, and you guys know that Sharesight I only have 3. So I got BlackBerry and Virgin Galactic, which are the US stonks, and the NZ stonks is just Plexure. And I guess from there you can kind of base your portfolio based on these kind of groupings. So for example, you can see that my New Zealand stocks, like Plexure stocks pretty much, have been dipping since like January, right? Because that's when the peak was, and it just literally halved. But for example, I increased my capital a lot on the US stocks since December, January this year, right? And you can see that there's a huge difference between how much I invest in US stocks compared to NZ stocks. And you can kind of change up these groupings and move it around to see like how your portfolio is progressing. It's a really nice tool. It's just that you need to use this fully, and once you're on this, you can kind of look through the entire thing. You can even have stocks that you don't have yet and use it like a watch list, and you can do kind of graphs on it, and you can kind of do like, for what I know, that you can add like, you can start like a, what do you call it? You can start like a demo account. So that's the part I haven't really got to just yet. But I guess you can make a new portfolio and you can put a bunch of stocks that you like, you can pretend like you bought it and you put it into the system and see how they track over time. And without buying into it, you can actually track through it and how they progressed. And it might be a good way to learn about the stock market and look through trends and what goes up when what goes down, and looking at the economic kind of factors based on how the stock market performs. So there's a lot of different ways you can use this, but I guess what people kind of know Sharesight the most for is these reports. So these reports, you don't get it on the free account. Because you don't get it in the free account, it makes you need to subscribe for them, of course. But I guess, like, for example, I don't need to pay FIF tax. So FIF tax is pretty much foreign investment fund income. And the thing with this is that if you have 50,000 New Zealand dollars or more worth of overseas investments, then you have to start paying tax on it. And I believe it's around 5% at the peak balance of your overseas investment. So for example, if my peak, even like, let's say my US stocks, so let's say my BlackBerry and Virgin Galactic hit like $75,000 total for my portfolio, and now it's down back to like 45. I think how it works is that they take 5% from the $75,000 peak balance your portfolio ever hit. It's very confusing. And these are the kind of things that might confuse a lot of people, and it still confuses me, to be honest. Obviously, I'm not an accounting major or something like that, so a lot of it was quite new when I first got into it. But the thing is that, yeah, it's like those kind of thing. You can kind of calculate it right away. But yeah, obviously, I don't need to pay anything because I don't have, what do you call it? I don't have more than $50,000 or more worth of overseas investments. It's only worth like, I don't know, like 15K. So, this is going to be very useful for people who have a lot of money in overseas investments. It makes your life easier. It shows you how you can calculate tax and what kind of tax methodology works the best to maybe kind of get the best out of the best tax option for you, I guess. Like, it really does depend, and they kind of calculate everything for you, which is really nice. So the FIF tax calculator here is only premium only, so this is something you have to subscribe to the Sharesight platform for, but I guarantee it's a pretty good one. Taxable income report, obviously, if you love doing dividends and distributions or interest payments, or well, just dividends in general, then it kind of shows you how your tax kind of comes in. Obviously, I don't buy dividend stocks, so you don't see anything here. I never got paid dividends, so yeah, it doesn't really concern me, I guess, in that kind of aspect. But there's a lot of other things. Like, for example, there's a diversity report. So if you love doing a lot of different investments, then pretty much you can kind of look at it like this. So package software is probably like BlackBerry and Plexure, and aerospace and defense is 6.12%. So it shows you how you kind of diversified, hence the diversity report. And of course, if you group it by custom, so if you group it by the custom grouping of my custom grouping, then you can see that 78.49% of my stocks is in US stocks kind of category here, and the NZ stocks is only 21.51%. So there's a lot of nice little infographics and kind of good kind of graphs and kind of those kind of things that's look into it. I don't look into much other things just yet, but like there's a lot of things like performance report, contribution analysis report. So how much I put into per market, or let's say into my separate groupings as well. So there's a lot of ways you can use the Sharesight thing. I think I'll kind of look into it more, and maybe in the future I'll probably do another video about how to use it properly, and hopefully it kind of benefits a lot of people. I think there's going to be a lot of people that might benefit a lot from these kind of infographics and graphing. It does help you kind of manage your portfolio. It shows you really interesting things that you might not be aware of or might not have noticed unless you kind of do these graphs by yourself on Excel or something like that. But at the end, this is all about convenience. If you can't do it manually, then this is a really good tool to look into. That's a good rant for a good 10 minutes or so. Any questions, or if you want me to look into anything, just let me know and I'll look into them for you. But this is pretty much Sharesight in a nutshell. Okay, let me go through the chat now. Are you still thinking of adding some NZ investments? Yes, I am. Yes, so I think that's the last one I had. So yeah, these NZ companies are something I'm looking into at this point in time. Do you think Plexshare has bottomed? I personally think so. I'm not sure. Like as you guys know, I'm leaving Plexshare this week. So yeah, I mean, I'm not an executive, I'm a normal employee, so I don't think there's a problem with me talking about it. Plus, I don't think the stock market really relies on one person leaving. But basically, the thing here is that I think I would personally, like, I don't know what I'm going to do. Like, I'm not going to sell my Plexshare just because I'm leaving. I still believe in the company. I'm still pretty bullish on the company. Of course, it's just a growth phase, and we just don't know how a company will grow until you get to the end of it. And there's a lot of different ways to go for a growth phase in a company. And I'm just really interested to see how Plexshare will grow in the future. Hopefully, by a certain time, it will be a lot better as well. And yeah. If it looks good from the outside once I come out, maybe I'll buy more. If it doesn't look so good, maybe I'll sell. I don't know. Like, I'm quite open to, you know, I'm not emotionally attached to Plexshare, like, anymore, I guess. Like, investments have to be rational decisions, right? So you can't be emotionally invested in anything because it's just not worth your time at that point. And you just got to think about it. Truly, is this going to make me money or not? That's the point of investment. And is Plexshare up there? It's still up there for me for now. You profit taking on SPSC. No, SPCE, sorry. My goodness, someone's keep messaging me. Let me put this down here. Okay, so am I gonna profit take on this? Maybe. It's actually crazy. Wait a second. Oh my goodness. I said I was gonna profit take at $50. I think I might actually. I think I actually might. This is nuts. Wow. So you guys remember last time I bought Virgin Galactic, it was way back here. I kind of bought once here, and I sold a bunch. No, so I bought it, so I bought it here and here. Between 28 and 24, I profit took on Virgin Galactic at 45 or something like that. And I kind of dipped. I should have bought more here, but oh well, that's fine. Now it's at $55. My goodness, that's higher than what I sold it before. Okay. No, wait. I need to look at what the aftermarket looks like. Alright, so let's look at the aftermarket. Ooh, aftermarket's even higher. I think there's a lot of bullish news about SPCE. So, see, you can see that a lot of people are talking about Virgin Galactic, especially with the they got approval from FAA for full commercial launch license following success of May test flight. So the May test flight that they did, I think I made a video. I think my May Sharesies report, no, my May Sharesies portfolio update kind of mentioned about Virgin Galactic and the test run they did. And if you go on YouTube and go onto Virgin Galactic's YouTube channel, you can see that test flight, and it was very beautiful. It was like, it's like money flying in the air. It's like, yes, give me that money. But no, nonetheless, I think it's a pretty successful kind of start to Virgin Galactic, and definitely the stock price is definitely reflecting that. It's kind of like a hot topic right now for a lot of investors. I think Virgin Galactic was something that a lot of people were very skeptical at first, because you just don't know, because no one really tried commercial space travel, right? Like, for example, we don't have random people like me. If I can afford it, I can literally go on one of these Virgin Galactic space travel, and it's not space travel. It's not actually going into space, but it's kind of like you can probably see the Earth from down up there. Like, it's a lot higher than an airplane. So plus you can look around, and I guess it's a really nice flight for a lot of people. So it's a really interesting market. I think a lot of people will pay for it. A lot of YouTubers will try to get on this, and the rich YouTubers will probably have a go at these Virgin Galactic flights in the future. It's got a really good market. I have to say, you can't beat Virgin Galactic in terms of this kind of sector they're kind of creating at this point in time. Like, they have so much R&D and so much experience, and like, they spend so much time on this company and the vision of the company, and it's only coming into our reality nowish. And I think people like FOMOing at this point in time. It's like, this is straight up FOMO, guys. Like, I'm not gonna like look, this is just FOMO. This is literally FOMO. Like, the moment people look at it in the news, they're like, down here back in May, like even 1 month ago, people are like, meh, Virgin Galactic, meh. Then they look at their test flight and boom, it's flying like crazy. So am I gonna profit take on this? Maybe. I think I will profit take just a bit. So I think I'll probably like just take out maybe another, how much do I have? 1,230 USD. Or that's like around $1,800 New Zealand dollars. Maybe I should take out like 1,000 New Zealand dollars, which is like around 700 USD, and kind of go from there. I'm not sure, like, because I was also quite skeptical about Virgin Galactic, right? That's the problem. Like, yeah, I didn't FOMO into Virgin Galactic. This is when I bought Virgin Galactic. I profit took half of my thing, and it's still a lot higher than what I started with. I only put in like, I don't know, like, how much did I put in? I only started with maybe 360. I put 1,000 USD. I already market sold 921 USD, and I still have 1,200 USD. So you can see how much money I made on Virgin Galactic just in terms of percentage. This is like one of my best stock trading I did on any stock really so far. So it's quite interesting. It says I'm 113% up, which is really nice, even if I took profit. Such a crazy world. I needed this extra zero at the end for Virgin Galactic. That's the mistake I made. I should have put an extra zero, and I would have made a couple of $10,000 by now. Damn it. Damn it. Ezra, good to have you in the live stream. Sorry, I'm really behind on chat. Let me get through the chat ASAP, Rocky. Let's go. So, Ezra, I just invested 52 cents from dividends into Tesla, man. I got a ton of shares. Did you put 52 cents into Tesla? Oh no, I think a lot of people on Wall Street bets are starting to buy Tesla again for some reason. I just don't understand this. I really don't understand this at all. My goodness, I don't understand. But good on you. 52 cents is better than nothing, I guess. Oh jeez. Gunhee. Good to have you in the live stream. If it comes to a point where a market crash or bear market for S&P 500 becomes very obvious, are you shorting funds like SH and SQQQ on Sharesies a good idea at all? if you're gonna do that, I rather not put too much money towards it, but it's not a bad idea because I personally think the market is overpriced like crazy. So would I actually short it though? I'm not sure. Like people try to short S&P 500 for a long time and it's just going down and down and down. But maybe it's a good time to just chuck in a bit of money into that. But it's just looking pretty risky. I'm just not sure if the market will actually crash and correct itself or consolidate and just not do anything for another year or two. Like, we just don't know what's going to happen and how the market will react because, as I mentioned before, no one can predict the market. That's the problem, right? And would I buy the SQQQ? I'm not sure. Probably not. I'm not a big fan of shorting stuff. Like, I would... yeah, it's like... How do I say this? It's not a good habit. Well, for me, I don't want to get into a habit of kind of trying to make money both ways of the market. Because at the end, I just want the market to do good in the long term, right? So if there's a dip, I would rather buy the dip than kind of try to sell the dip, well, kind of short the dip and then try to buy at the bottom. It's just too much hassle for me. I think like people who are a bit more serious about making money and if they want to be extra risky and extra sketchy and buying these SQQQs, then sure. I don't think it's a hugely bad idea, but if it doesn't dip, then it's no point doing this, right? And you're just putting money into something useless. So you got to make this mind up really carefully. And shorting is something that should not be done too hastily and out of emotion as well. So that's the important thing about shorting the market, okay? So just remember... there's no guarantee the market will actually crash, and that's the problem with it. Muro, good to have you on the live stream. Are you losing weight? When weight review? Go on my personal channel. I'll talk about my weight loss, but I am losing weight. I lost 4 kg so far. So, yeah, in your face, Muro, please. Leanne, that's bullying. Bradley, that's good. Actual FOMO, yes. Virgin Galactic, actually FOMO. Chong, thoughts on Clover? Is that Clover Health or something like that? Is that the thing that everyone's talking about on Wall Street Bets? I don't know what's going on with them. Like, can anyone give me some light on what's actually happening here? Is this another GameStop or another AMC? I don't know. Like, I've just seen people talk about like the stock like crazy on Wall Street Bets, and it's like one of those hot topics in Wall Street Bets right now, but I just don't see it. Like, what is so special about this company? I just don't know. Do let me know if you know anything about it. But I stopped following Wall Street Bets for a while because it's just retarded. It's like, you don't go on Wall Street Bets for actual financial advice. If you go there for financial advice, you need help. You actually need help because that's not good. It's just not good. Like, let's have a look. Like, what's going on here? See, GME are building up for another squeeze. Like, come on, ridiculous stuff. Ridiculous. And people buying Wish. My goodness. They're just YOLOing into Wish. 300k YOLO into Wish. My goodness. Like, these guys are actually nuts. Like, I am kind of scared about what the future of investing is going to look like when we have a lot of people like this. This is the funny thing. Like, this is funny as like BlackBerry's latest financial report being discussed by John Chen with shareholders. I need to look at this video if there's a video about this as well, but I don't understand how to read a financial report. That's the problem. I tell you guys every time, if you don't know how to read a financial report, you better learn how to read it, especially if you're investing in individual stocks. The reason why I use Simply Wall Street is because Simply Wall Street makes it a lot easier to read a financial report. It's literally getting the financial report and make it into infographics platform. And this is why I love Simply Wall Street. And Yeah, it shows you right away, like the graph, the history. You don't have to look through all the numbers yourself. It shows you as a graph. It's pretty easy to read. Like you can see that they're not making that much revenue, but their earnings is coming up and all those kind of good stuff. Let me just remove my messenger. But anyways, yeah, you can see that Virgin Galactic. Is this Virgin Galactic or is this BlackBerry? Virgin Galactic, the earnings are coming up, so they're not making any revenues though. Interesting. But either way, like these are the kind of things that you got to look into. How to read debt to equity ratios. Balance sheets really important as well, because I think there's a lot of different ways of reading the balance sheet. I'm still not sure what the best way of reading balance sheet is. So this is something I do want to kind of study myself in the future. I'm not perfect about reading financial reports, but you should be at least be able to make some sense out of a financial report. Because if you can't read it, you should not be buying stocks, like individual stocks. I'm actually being serious. Like, it's literally going into a game with no strategy. You only got into the game because your friend told you to, and you're stuck there and you don't know what to do because you don't know how to read a financial report. Remember, these companies run by financials. If they can't make money, or if they don't have a good plan to make money, they're not going to succeed. So that's the basis of what a stock market, well, what a stock is can the company make money? Yes, stock price goes up. No, stock price goes down. It's pretty simple. And how do we define that kind of result? How do we conclude? How do we get something? How do we make a decision out of that? By reading the financial report. So it's really important. Either way, well, thoughts on Clove? I'm not sure. Damn, this has to be good investment, man. Yeah, this has been a pretty good investment. Virgin Galactic is literally making me a lot of money. I just wish I had another zero there, and it would be a lot better, and I would be able to buy a lot more New Zealand stocks. But right now, I'm also increasing my cash position for a property as well. So I started kind of slowing down on stocks. If I do make a lot of stock profits on BlackBerry, Plexure, or Virgin Galactic, I'll start moving them into maybe new stock. So maybe if I do sell Virgin Galactic, or like profit take from Virgin Galactic, maybe like half of it, then I'll maybe buy a New Zealand stock with it, like one of these ones in my watch list. So there's a lot of things I could do with this kind of thing. So let's see about it. Hey Jordan, good to have you on the live stream. Rick, good to have you on the live stream as well. When will you take profit on your crypto? When you buy a house, apartment, retirement, I will never cash out my crypto. End of story. I'm probably just going to use it with a Visa card or something like that. I don't think I'll be cashing out crypto. I think I'm just going to hold it for a long time and see where it goes. I don't have like life-changing money in crypto. That's the problem, right? Like, I just want to see it grow. If it grows a lot, then cool. I'll use it in the future when it gives me the opportunity to. But because we're still pretty early about crypto, I don't feel the need to cash it out, because I initially put my money into crypto thinking I lost that money. Like, that's the mindset I had when I started cryptocurrencies, and it's been 4 years. It's around the time where I became very insensitive about how much money I have in crypto. If it goes up 100% or goes down like 50%, it doesn't really affect me much. I'm like, okay, I mean, cool. Crypto's just doing what crypto is, so very volatile. So yeah, I don't think I'll be profit taking on crypto anytime soon. I'll be just holding it and see where that goes. Chong, meme stock, but has a little reason with it. I guess I just want to know what the reason for Clover though. Like, what is that reason? Because sometimes when I'm looking through Wall Street bets, I see retarded DDs, but I actually see useful DDs. So what is this due diligence that people are hyping Clover for? That's my question. So let me know if you know what the reason is. It's kind of hard for me to I don't even spend that much reading into Clover anyway. So yeah. Bradley, who puts 300k into Wish? Oh my god. You'd be surprised what kind of retarded trades there are in Wall Street bets. Wall Street bets is like crazy. They do crazy option calls, and they do crazy YOLOs. Like people putting like their whole life savings, like $100,000 worth of money into GameStop, AMC, millions of dollars into AMC and GameStop as well. It's like, it's crazy. You'd be surprised what kind of people are on Wall Street Bets. And the thing with, I don't like the fact that new people are starting investing by looking at this Wall Street Bets. It's not a good mentality to start off investing with. So for people like me, I've been in the space for at least a bit of time to know that this is retarded. But because I know it's not good, I can read it as entertainment, but I don't get easily swayed or persuaded by these people to buy into a meme stock. People call BlackBerry a meme stock, but I actually see proper reason of why it's going to go up in the future. So I'm holding that. I'm holding BlackBerry because I can actually see the reason. I read through their financial reports. I go through the strategy and what kind of products they want to sell and what kind of direction the company wants to take. And these are the things I've researched before buying BlackBerry. So I don't care if people call it a meme stock. Eventually there will be a time where people will feel missed out when my hypothesis comes to life and actually BlackBerry goes back to a triple digit stock price. So, you know, there's a lot of speculation on Wall Street Bets that people put a lot of money into. It's a hit or miss. It's literally a gambling site. Wall Street Bets is literally a gambling site, and you're just looking at other people's gamble bets, and you're hoping that hits, right? Because the moment that doesn't hit, you're losing a lot of money. So, and a lot of these Wall Street Bet squeezes and what we call stock squeeze is happening, driven by these Wall Street Bet people. There's a lot of people in this, in this kind of community. Let's look at how many people are in here. We got 10.6 million people in this Wall Street Bets Reddit alone, and a lot of people might not even have joined. I've joined just to get some entertainment out of it. You know, when you're sad and reading through this, you just feel better about yourself because you're like, God, like, thank God I am not that retarded. Like that's the thing. Like I comfort myself doing that. Like it's really important about that. And yeah, you gotta read through Wall Street Bets like it's like another entertainment platform for you to feel better about yourself and just look at people lose money or make a lot of money even. Like, yeah, just don't take any advice from anyone on that kind of forum. It's not the best idea in my opinion. Just, yeah, even though I'm not a financial advisor, I'd probably give better tips than them. Like, if you ask them for advice, they'll probably be like, just buy GME and AMC and Clover. Easy money. It just makes me sad sometimes. It's like the investment community is not supposed to be like this. It's not good. When should I take profit on a stock? So when should you take profit on a stock? That's a very good question. It's always a struggle to know when is the best time to sell my stock. Now, there's a lot of things you can do. You can be like, so for example, a dividend stock that the purpose of buying a dividend stock is to keep it for a long-term time, get your 5% dividend yield per year, and just live off that passive income. So that's the important thing about. So yeah, let me put this Sharesight. Oh no. Let me find this. Sharesight.com. Let me put this on the thing while people, just so it kind of matches my title. Okay, but you know, so let me talk about when to sell a stock. When do you sell a stock? So when you enter a market, you know that for example, I bought BlackBerry. I bought BlackBerry at an average price of $15 or so. Okay, and I've just dollar cost averaged it. I should have dollar cost averaged it a lot aggressively when it was below $10, but that's my fault. I just didn't do that. But at least I brought down the average quite a bit, because the average was like $18, and that was a big mistake. But either way, made it slightly better, and I'll hold it for a couple of years at least. So I came into BlackBerry thinking a target of $50, $80, and $100. Those are my three targets. And when BlackBerry hits $50, I want to sell a bunch. When BlackBerry hits $80, I want to sell a bunch. And when it hits 100, I want to sell a bunch. You can always kind of redo your calculations. The thing you don't want to do is kind of keep pushing out when you want to profit take, because it's very important to profit take, especially when you're making aggressive targets like what I've done right now. Because if I came into BlackBerry and if I say I'm going to sell at $50, $80, and $100, it's a long way to go from what the current price is. And that's the important thing. You need to make these targets at least realistic enough for it to be reached. And for my analysis, I think it can easily hit $50. But is it actually gonna? I'm not sure. But if it does, then I literally like 3x my money. And this is the whole point of growth investing. So it really depends on what your intention was to buy that stock. Are you there to get dividends, or are you there to make a lot of money out of, like for example a growth stock? Like Plexure, I think I've always mentioned, even though it's come down quite a lot, I have to say I'm kind of sad my company stock came down quite a bit. But you know, I was looking at a very long-term target of $10 for Plexure. I don't think that's going to happen anytime soon. It's going to at least take another five years to maybe even 10 years. We just don't know what's going to happen. But I was actually thinking at least up to $3 we can hit, and like $2 and $3 I'll actually profit take on Plexure. So these are the kind of targets you need to come in with, and that's the problem with it. It's not easy to know when to sell a stock, and that's totally up to you. Everyone has different kind of needs. Everyone has different reasons why they're in the investment world. Like a lot of people don't know how much money they want to make on a stock before they get out again. Like these are things you do need to think about, but people don't think about much. And when, for example, if you bought GameStop at $10 and when it was at $300 and you're still holding on to them, you should just sell it. If you're feeling anxious about it, just sell at least your initial investments and you're covered. And you're playing with your profits. And I'd say maybe at $300 you're already 30x your money, then you should at least take like 80% profit, in my opinion. Like nothing can sustain itself after a very large growth. So another really good point is that when you buy growth stocks and tech growth stocks to be exact, it tends to be the fact that nowadays we live in a very dynamic investment world. For example, we can see stocks going 10x in like a month. Like it's actually nuts. It's actually very crazy, and it's something we just never seen before. It's getting worse and worse over time as internet is very heavily involved in investing, unlike back a century ago where a lot of people went to the brokers themselves and bought it like manually. You can get information so easily through the internet now. You can buy and sell stocks so easily. So, you know, like the prices change really fast, and that's the problem. For example, I have a target of $50 on BlackBerry, but if I suddenly see this go to like $20 or even $30 next week, end of next week, let's say a week later, this literally doubles or triples. We know that that's happened for some reason. It could be very artificially pumped, like manipulated, or it could be driven by some kind of news. It could be driven by a partnership. We don't know. But either way, a good way to do it is if it goes up really fast, I normally sell a bit at the top. Well, not exactly at the top. I can't time it exactly, but you know, you would actually at least sell a bit when it has risen that fast, and you'll expect it to drop a bit more. And even if it doesn't drop a bit more, that's fine. If it keeps going up, you sold some, you took some profits, and you just invested elsewhere, right? So it's good to take profit. It's good to take profit every so often, especially when there has been some kind of massive spike. Because when there's a massive spike, it's not sustainable. Spikes are not sustainable. Sustainable is something that organically grows over time. But so that's another tip for you guys. If it spikes, I would sell a bit after it spiked a bit. Like, yeah, for example, BlackBerry at $20 next week, I will probably sell just a bit, and I'll see what it goes from there. If it does dip back down again, you buy it up again. If it doesn't dip again, then maybe you can invest that somewhere else into another company. So it's a very smart way. It's not very good to be greedy and holding onto your money for such a long time where you lose out opportunities on actually selling those stocks at a pretty good price. So you always have to be ready to be selling, especially if you're doing growth investing. Whereas if you're doing dividend investing, you don't need to do that. Price spikes don't matter for a dividend stock. You're just there to get your passive 5% to maybe 10% at best, like average 5% dividend yield per year. And that's what you should be in it for. Just because there's a price spike up or down should not give you any incentives to buy or sell. Just keep going with your plan. That's dividend stocks. And so there's a lot of different ways of investing, how to enter the market and how to exit the market and how to profit take. There's a lot of different ways and methodology and strategies you need to think about for these different types of investments. So these are kind of like one of the things. It wasn't very clean. I don't know if I made much sense just now, but just let me know and ask any questions if you're unsure about anything I just talked about, and I'll kind of rephrase and kind of clarify on that if I can. So I hope that answers your questions, Jordan. Jordan, another thing as well, intrinsic value. If you know how to calculate the intrinsic value of the company, this only works for when you're doing like value investing. On bigger companies, then you can do intrinsic value calculation and you can sell it when it hits an intrinsic value or something like that. There's a bunch of stuff like that Joshua Wang made a pretty good video about calculating intrinsic value on dividend stocks or just normal stocks. So have a look at his channel, and he made some videos about that. I'm no good about those kind of too theoretical things with all these kind of calculations. I'm more street guy, so hopefully that gives you a good insight about what I think about that anyways. Eva, what do you think of Disney? I think Disney could be a pretty good dividend stock for what I can see. So because these kind of subscription-based services and kind of they have a bunch of other stuff, like, I don't know, what else do they have? They have like theme parks and whatnot. But the big thing about Disney when it came public and it came into the came into the space is when they released Disney Plus, and subscription based is pretty good, especially when you are looking to become a dividend company, and it should pay good dividends. Let's look into it. No, it's not paying good dividends. Well, it kind of died off in 2020. Not even a good dividend stock. Okay. So what's the point with this? Yeah, I don't know. Like, I haven't looked into Disney too much in general, but P ratios at -72%. They're not making any earnings. They're negative right now, but they kind of bottomed out and they're just consolidating in terms of earnings. Their revenue start dipping a lot. I guess that's due to COVID. Equity rose. I think there was a share price increase. So I don't know what happened here, but the debt rose as well. Okay, so no. Okay, that makes sense. So they probably just borrowed more money. And I guess that's to grow, but I don't know in which way. Is it for Disney Plus? So there's a lot of things you need to think about. But first of all, there's a few tips and tricks on buying these kind of stocks. Is I normally look at insider traders. And this important thing about this is that people kind of know information before us. And when these guys kind of trade, it's normally outside their blackout periods. And when these important people sell, it's normally not a good sign. For example, the lead director, chairman of the board, or chairman of the board selling a bunch. That's a lot. That's actually a lot. Wait a sec. My goodness. Yeah, so chairman sold 550,000 shares. That's not a good sign. Normally speaking, that's not a good sign. I'm not sure what the whole point of this one is, but normally this is a very big like red flag for me, because this guy's the chairman and the executive chairman of the board, and this guy just literally sold a huge chunk of what he owns. Another lead director and head of human resources, head of HR, like that's not a good sign. And for example, institution selling is normally not a good sign as well. So Morgan Stanley, Vanguard, and State Street just selling just a bit. They kind of cut down the employees as well. I think that was pre-pandemic as well. No, not pre-pandemic, post-pandemic. So there's a lot of things you need to think about these kind of stuff, and you got to see if Disney as a business is actually going to make a lot of money with Disney Plus as a kind of like a new kind of thing on top of what they normally did so far. So we don't know. I would have thought Disney would have been a pretty nice dividend stock. Maybe not with that kind of return. So these are the kind of things you need to look into. Yeah. But yeah, I don't know what I think about Disney. I'm not a big fan of Disney as like a business, in terms of like, I'd rather invest my money elsewhere, because I think they're a bit too expensive for what they are, in my opinion. So hopefully that kind of answers your question. Weesbox, good to have you on the live stream. Oh yeah, still alive. Yes, I am still alive. Alexander, good to have you on the live stream. Hi Choiboy, what do you think about the next market crash? When and what to do? Maybe it is time to fix profit and go on cash to buy on the dip later. Thanks. I don't like people timing the market. So for example, if you think the stock price is going to dip, then just wait out, because you just don't know if it's actually going to dip. And I say that the market's going to dip. Well, I want it to dip because I think it's overpriced, but the world might have a different plan from what I think, and it might not dip. It might just consolidate a bunch of time for like a year or two and go up again. So we don't know what's going to happen during this phase, this awkward phase where the market's too expensive. Not many people are putting more cash into the stock market, but it's just doing nothing really. We just don't know what to do at this point in time, and that's the problem, right? Like the S&P 500 is literally just stalled. It's not doing much recently, and it is quite interesting. It's still creeping up, which is quite amazing. I just don't understand what this is all about. I don't know if this is the effect of Wall Street bets, or just more retail investors, or is this institutional growth? I'm not sure where this money is rolling in from, but I just can't make any sense of it. Regardless, you just don't know when it's going to crash, and for that reason, I would increase your cash position right now. So just save up your cash. If you don't really have a company you want to buy right now, just save up your cash, and just wait for an opportunity, because there's always going to be an opportunity. Just because you missed an opportunity does not mean it's the end of the world, which most people think that way actually, is, oh, I couldn't buy this company, it was such a good price, now it's so high. There's always going to be other companies that will go up in price. Like, there's no doubt about it, and you just got to be ready. And it's always good to have cash, regardless if it's a stock market increase, like during a bull market or a bear market. It's very important you have enough cash to buy up opportunities at any point in time. Yeah, I guess, yeah, I can't guarantee on a market crash, but I do want a market crash myself, because I would then actually put in a bit of money into the stock market again, because I haven't put that much money into the stock market since earlier this year. So yeah, we'll see about it. Dean, good to have you on the live stream. Do you have any positions in cloud storage stocks? I am in Dropbox, and it's done quite well during the market downturn. I mean, it's kind of hard to say if it's a market downturn because it doesn't look like a market downturn when the S&P 500 is going up. Actually, it's actually creeping up. So people think it's a market downturn, but I don't see this downturn yet. Like, for example, let's look at NZ Top 50. See, it's just consolidating. It's not a downturn. We're just consolidation phase at this point in time. And the same with the S&P 500. It's slowly creeping up, but it's still consolidating, well, relatively between the ranges. So it's not going like crazy high or anything. So during this consolidation phase, do I have any positions in cloud storage stocks? No, I do not. I did have some Dropbox, but that's because Stake gave me some as referral bonuses. Because I have the Stake affiliation link below. So yeah, they give you free stocks, either Nike, GoPro, or Dropbox. So I got 3 Dropbox. I kind of sold it. Dropbox. But yeah, it's done pretty nicely. I've sold it around here, so I actually sold it quite recently. So yeah, it's not bad. I mean, cloud storage is always going to be a big thing in the future, and Dropbox is a pretty good company that's done themselves pretty well. Yeah, am I really bullish on it? Kinda. In terms of usage, there is a good use case scenario for cloud storage, but it's not something it's not something that kind of interests me a lot, and so I will pass on cloud storage. But it's not a bad one in my opinion. They make a lot of money, because yeah, I mean, I guess the USB and the hard drives and even the NAS kind of era is slowly going downhill. So yeah, cloud storage is definitely going up over time. Palm G, thoughts on AMC? Don't even talk about it. It's ridiculous. It doesn't make sense financially where they are. The stock price does not reflect well on where they are financially as well. I just don't feel like buying into them. While I have a water break, if you haven't liked the video, well, like this live stream, give it a thumbs up. It helps with the algorithm. And hopefully I can get some more affiliation links for you. So if you guys missed out on the affiliation talk, I have an affiliation with Sharesight. You can go to sharesight.com till 7 figures, or there's the link below in the description. Then if you get an annual premium plan, you get 4 months free. So look into that. I'll probably make a new proper video about Sharesight in the future, but yeah. The affiliation link is there for anyone to use anytime they want, if they feel like they need Sharesight in their lives. So that's that. Okay. Dean, any other YouTube channels you enjoy watching? I do like watching Andre Geek. I don't know how to pronounce his name properly, but Andre Geek. It's like that magician guy. He's a US fellow that lives in Texas or something like that. So he's pretty funny to watch as well. He's pretty nice. His video editing is pretty good. So I do enjoy watching his ones. He's not like very technical in terms of investments, but yeah, he's nice to watch. He talks about really good concepts of crypto and just stocks as well. He loves investing, so that's a pretty nice one. Stephen Graham Stephen is also another one that kind of I like watching. I don't watch him nowadays, but I used to watch him quite a lot last year. So Graham's a pretty nice one to watch. He's very frugal. So if you like that frugal lifestyle, then Graham Stephen, I think a lot of people, you guys would have seen on YouTube before. He's pretty nice to watch. Other than that, in New Zealand, I do like watching Just Josh's one. He's like my number one go-to in terms of if I have questions or if I want to know more about numbers and accounting, I go to the professional because he's the guy that knows all about the accounting stuff. So I go to his channel a lot for that technical kind of help, and he does really good analysis on companies as well. For example, he did a recent one around Oceania healthcare, and he's also a mate of mine, so I do like watching his content as well. It's very informative. So have a look at Joshua Wang's account as well. Yeah, I think I featured his channel on my channel. So if you go on my main YouTube channel page, then I think you'll see Josh in there. Yeah, but other than that, not really. I don't really watch too many YouTube financial investor YouTubers. So yeah. Stevo, good to have you. Did I say hi to you yet? I don't know. But Stevo, good to have you in the live stream. A2 looking something to buy it into. Yeah, it is quite high up in my watch list right now. I think A2 milk is pretty interesting. It's been consolidating at this point in time here, at this space here between $5 and $6, $7. So I think it's a pretty good buy if you want to get it. If you ever thought A2 milk was too expensive around the $10 plus ranges, here is a really good opportunity for you to get in. Of course, they need to find a new way of distributing their products out to overseas customers, without the need, well, without the big reliance on the Daigo channel. So I don't know what kind of channel or what kind of new kind of ways they'll use to spread their products elsewhere in the world, but that's the challenge that A2 Milk would have right now. It's a demand problem, and it's just something that A2 Milk will have to get over. It's not an easy time for them actually. So there is a bit of risk involved into when you're investing into A2 Milk right now. But if you believe in the business model wise, they are still pretty good business. It's just they have a problem selling it right now. So yeah, it's something that it's a homework for them to kind of figure out. Rainmaker, what do you think of Intel Corp? Intel is pretty good. I mean, Intel is something that is somewhat it's never going to run out of demand. For example, I think they will have more of a supply issue than a demand issue. There's a big demand on CPUs and kind of these CPUs, like mainly CPUs, I guess, but they make a lot of good kind of hardwares and stuff like that. So I think they do a bunch of other stuff. I haven't looked into Intel, well, other parts of what they do in the business, but if we look at it, the P ratio is pretty good for this kind of sector. Semiconductors industry, they say. So 12.5%, 12.5x is a pretty good PE ratio. PB ratio at 2.8 is pretty good for this kind of company as well. And I guess Simply Wall Street is telling you some green lights there. Their revenue and earnings is not going to be any worse. Like, they're pretty consistent about how much they earn, mainly because that's a really good business to be in. It's like the industry, you just can't fail, because we know Intel has a really big kind of market share around the CPU and these kind of semiconductor and computer components kind of industry and sector. But yeah, so revenue and earnings you just don't have to worry about for Intel. Equity and debt is pretty good. I think debt to equity ratio is pretty fair. Dividends, it seems like they pay a bit, and it's somewhat pretty consistent, so that's pretty good. And on top of the stock price increase, you get a bit of dividends on top, which is always a nice little bonus there. And you got no one selling, some people buying a bit. So that's always good news as well. The chief financial officer buying is always a pretty good, a pretty good buy kind of signal. It's not a guaranteed buy signal, but it's normally a good thing when the CFO buys, and it's normally not a good thing if the CFO sells, unless there's other reasons to it. Thank you for that loud noise car outside, but let's carry on. Yeah, AMD is probably, I would rather invest in AMD over Intel, just personally speaking, because I think I do like AMD CPUs, and they've been kind of they've been going uphill in terms of they know what people want, and they made a really nice CPU. The Ryzen series is just really good. It's kind of my favorite. I'm also using the Ryzen CPU in my computer as well, so that's something more of what my interests are. But Intel's already kind of big. I do like investing in underdogs rather than big dogs. So let's see about it. Ginhee, did you take Nike stock? Did you profit take Nike stock? No, I never had Nike. Yeah, so let me get this straight. When I use Stake, they gave you either get Nike, GoPro, or Dropbox randomly. Nike, I never got. I got 3 Dropbox and a few GoPros, and that's all the referrals I got from Stake. So yeah, I never had Nike, so yeah, nothing to talk about there. Dean, Sharesight, what level subscription are you on? I'm using the starter plan and it's great. I'm on the premium one because I am affiliated to, well, I'm in the affiliate program with Sharesight now, so that's why I can give you the site. So if you want to use the premium, so I'm on the premium plan. So I'm on the premium plan. Okay, let's see. I'm on the expert plan, I think. Yeah, I think I'm in the expert plan. Let me check actually. Wait. Let's see. Where's my plan? Yeah, I'm on the expert plan right now. So yeah. Let me go back. So I'm on this plan right now, but that's because I'm on the affiliate program. So Sharesight team gives me all the features they have, so I can kind of look through it and kind of show you guys this kind of thing as well through the live streams. And yeah, it is quite pricey, but I think it's pretty worth if you do have a lot of money in investments, and if you don't have a good way of kind of analyzing your portfolio, or if you want to know more insights about your portfolio, they have pretty good integrations with a lot of other kind of things like Simply Wall Street and Hatch and whatnot. So there's a lot of things you can look into. There's so many things, like for example, if you have a accountant, and if you want to just give your accountant access, well, a view access to your Sharesight, then you don't have to give them reports yourself. They just go into Sharesight and do all the accounting for you if they want. Like, there's a lot of good use case for Sharesight. So yeah, I'm on the expert plan. I think the most important, well, what people like to be on is in the investor plan is apparently the most popular. It's pretty good. I think I do really like their reports, and it'll be pretty good if you have a large number of companies as well. If you're quite well diversified with a decent amount of money into each one, then it's pretty good. So yeah, just look in here, and that's the yeah, you get 4 months off with my affiliation link. So the affiliation link is in the description below, so have a look into that if you're interested. Steve-O, card magician. Yes, card magician, yes. Andre. Kiwi Beef. Good to have you on the live stream. Thoughts on buying lithium stocks? It's a gamble, because not all lithium stocks is going to go up over time, because there's good lithium stocks and not so good lithium stocks. And also it depends on how future proof they are, and if they're relying on a specific company to supply to or whatnot. There's a lot of business model questions you have with lithium stocks and any kind of new kind of trends about a certain sector. And lithium stocks is also a relatively new trend that kind of come from that EV boom, and we still haven't got that EV boom, so it's kind of hard to say lithium stocks is definitely gonna go up, but there is a need for lithium kind of products. So just be careful when you look into lithium stocks, because I think a lot of these lithium stocks would be not profitable at this point in time, and they'll be investing a lot of money in infrastructure and growing the company and going through partnerships and kind of establishing good long-term partnerships with certain kind of, and be suppliers of certain big companies or whatnot. So there's a lot of things that lithium stocks have to do to become that big powerhouse of lithium stocks in the future. So yeah, it's kind of the hype stage at this point in time. We had a bit of lithium hype back in the day, back maybe a year ago or so as well. So you do have to be careful when you're in this kind of space. I think lithium stocks, it can actually burn a lot of people, because the company itself, not a lot of lithium stocks are like well established already. It's yeah, it's hard to find the gem, right? Because I think a lot of people will go pretty risky if they go into lithium stocks, and that's another issue as well. Cameron, good to have you in the live stream. Intel Core i5 7700K here. Ryzen is my next upgrade. Yes, I have the Ryzen 3700X, I think. So yeah, it's pretty nice. It's definitely nice. So Ryzen is a really nice CPU. And you came in as soon as I started thinking of closing the stock. No, not closing the stock. What am I talking about? Closing this live stream. So you're a bit late. I don't know how much. I kind of want to invest more into NZ stocks in the future. Like, I don't want to put too much money into US stocks. Like, I do understand that there's a need to buy international stocks to. There's more interesting stocks in the US market rather than the New Zealand market. That's the problem, right? Like, yeah, like BlackBerry is very interesting to me, and you don't have companies like BlackBerry in New Zealand, right? I guess the addition of ASX companies, the Australian Stock Exchange, and Sharesies is a really nice balance, because I think ASX has at least more interesting companies than New Zealand. I haven't looked into the companies that ASX kind of makes available to me, so I kind of maybe look into ASX. I'm not sure. Like, I don't want to like FOMO into any ASX stocks either, so I've been keeping it very slow. But also because I'm waiting for that market crash that might never happen, it is kind of I'm a bit hesitant to put a lot of money at this point in time because everything's just really expensive. I'm wanting the 5950X. My god, do you even need that? Oh god. Dean, are you keeping live streams to Sunday? I saw you did a stream on Monday night previously. Normally I do it on a Sunday, but if I do want to kind of socialize with my friends on a Sunday, because I do go to church, I do it on a Monday. Normally on a public, like in a long weekend, because most people are not around on a Sunday, or they might be out in the wild or going on a road trip or whatnot. I tend to do it on Monday, especially on long weekends. And sometimes if I can't make it on a Sunday night, then I do it on a Monday night, or sometimes I just skip that week. So it really depends on my plan. It's not like 100% guarantee I'll be doing a live stream every Sunday. For example, like it's nearly the end of June, so I got the Sharesies report, Sharesies portfolio update coming for June really soon, so I need to make that video soon. Yeah, and for that I will have to, normally I would put it on a Sunday, but this time I decided to actually put it on 30th of June, so I'll probably have to making that video on Tuesday or something like that and just put it up. So let's see about it. I didn't get any notice that he was doing a live stream today. Yes, I do. Friends, Aka Church BBQ. Okay, it was not a church BBQ for like the past few, so yeah. Oh well. Where can we watch your weight loss journey again? There is no weight loss journey, but if you go on my personal account, it's one of the featured channels on the, so if you go to the Till 7 Figures channel page, the main page, then you can probably see a bit of featured channels, and you can see probably my Choiboy channel in there. So if you go on that, I might talk about it. It's not officially anywhere at this point in time because I'm just losing weight, and that's all that's happening right now. No skipping. Yeah, I mean, I don't want to skip live streams, but sometimes I do have a social life, guys. And remember, YouTube is not a full-time job for me. It's something I do on the side just to keep myself relatively, active in the investment space and talk about it. And I also revise from what I say as well, monitor what I say, kind of learn from my own mistakes as well, and kind of try and make discussions, productive discussions with you all, so I could probably give you a hand or two on certain things and certain topics. So yeah, with us it's always a church BBQ. Yeah, probably not that much of a big thing during winter barbecue. We'll see about it. Rick, do you bench press? Yes, I used to bench press. I don't bench press anymore. Um, yeah, yeah. I used to bench press. Well, I don't go to the gym much nowadays. Like I kind of have to, but I've I want to focus more on my eating habits first because that's probably the most problematic part. Um, yeah. I do more Les Mills on demand at the moment than actually going to the gym. Les Mills on demand is pretty good for just burning calories and it's really tiring, so it's pretty good. But yeah, he's all about them gains. I don't know. I wish. Have you looked at Tiger's Brokers? Wonder if it's any good. I think Tiger Brokers were a bit hard for me to use. I did register on their platform, but I actually didn't use it because it's so hard to use. For me personally, I don't really like the UI and I don't like how everything's set up. It's everything's a bit confusing for me, so I just didn't use it. Plus, Tiger Brokers, they're more towards like what do you call it, day traders. Like, yeah, like if you're not day trading, just stick to Hatch. If you're doing US investments, I think that's a better choice over Tiger Brokers. Or maybe just if you want to keep everything on Sharesies, it's a pretty good idea to keep it on Sharesies as well. Especially once Sharesies removed their subscription fee, it's pretty competitive. So have a look into that. Still looking for your dream apartment? Yes, I'm looking at some of the plans apartments. So I'm kind of looking at, well, because I don't want to go into the apartment anytime soon. Maybe in the next year or two, I'll start looking for some ones that are about to be starting construction soon, and because you can put in less deposits towards the ones that's not built already. Well, normally existing house you need a 20% deposit, right? So for off the plans ones that is in the plans to be developed, you only need 10% deposit and you only pay for the property after the construction has ended. Then your mortgage actually starts from the time where, what do you call it, the construction ends, which is pretty good because you just need to give that 10% deposit and it's there. They can't scam you because it stays in a trust and they give it back to you if if it doesn't go to plan or anything like that. So obviously you do need to look through the contract and have some actual professional legal people to look into the contract as well. So yeah, off the plans apartment is kind of where I'm looking at right now. Yes, but he's looking for one that doesn't have any acronyms like TLC attached to them. Don't bully me, Cameron. My goodness. You need to invite us for a BBQ. We'll see about it. Like, I don't think I can fit that many people in my house, but we'll see about it. Tiny Asian, tiny home. What are you trying to say, Cameron? I'm massive. I don't know what you're on about. I'm not tiny, bro. I'm massive. Okay, that's just cringe. Rick, would you live in it or rent? I'll live in it. I love apartment living. I love city living. So, yeah, I'm not much of a rural person, so I don't like living it out in the wild in a rural place with not many people around me. That's just not my kind of living style. I love busy cities. So, I'd love to live in CBD. Maybe in the future, if I have kids, then maybe I'll move out to like North Shore or something like that. But if that's not the case, yeah, just apartments fine for the rest of my single life, I guess. I can come for a BBQ. God, this chat is becoming weird. I'm curious to see if I'm actually taller than him. Wh- What are you trying to say? Like, I am pretty short though. I'm 169, I think. I'm like just under 170 centimeters. So, yeah. You might be taller than me. I've seen quite a few girls who are taller than me actually. Actually quite a lot. Which is quite sad. Which is quite sad sometimes. Or you could kick your parents out into it and not move out home. My parents don't like city living. They're a bit more on the chill side, so I'd love to live in the apartment, so that's fine. I'll book a flight right straight away if you invite me. We'll see about it. I'm not sure about a barbecue, but maybe you, me, and Cameron can meet sometimes. We'll see. How much do those apartments cost usually? So maybe it depends on the apartment, right? So some expensive ones, one bedroom could be like 800K plus, but like just normal apartments off the plans, I think you can get like a one bedroom for maybe 500, 600K. Like I'm talking about decent ones, not like cheap ones, but actually properly built good ones by like reputable kind of developers and architects. But yeah, two bedrooms for maybe anything between 600 to 800, and I think three bedroom plus would be well over 1 million or something like that. So yeah, or anything more than 800K would be the 3+ bedrooms. It really depends. Like the Sugar Tree complex on the top of Nelson Street in Auckland CBD is really nice, really cheap body corp, built really well. I've been in one of the apartments. It's really good actually. It's pretty good. And would you buy the apartment? Yes, I would buy the apartment. Obviously, then I have to look at the rates and the body corp and see if it's worth. You don't buy an apartment to live in to make big capital gains out of. But at least if you buy it off the plans, then you kind of get the apartment a lot later, but you get it for a fraction of the price. Like you get a good 20 to maybe 30% discount from the market rate, and maybe if you're lucky you get even 50% off the market rate, because you just don't know how much the apartment's gonna be worth once the construction ended and people start selling them and stuff like that. But maybe there's not going to be that much of a difference because there's a new law about selling property that is less than 10 years from when you bought it and stuff like that. So there's a lot of things you need to think about. Kiwi Beef, property is a good investment. Yeah, I guess. But if I'm buying an apartment, I'm buying it more for non-investment reasons, for maybe for convenience of living, because a lot of the things I do is in the city. Like my work is in the Auckland City district. All my hangouts are normally in the city. My badminton club is in Newmarket, so there's a big incentive for me to live in the city, because I have to drive a lot because I live out in East Auckland, so it's a bit of a hassle sometimes, to be honest. So yeah. Okay, chat has chillaxed a bit, so I'm gonna slowly bugger off. That's a deal for me. He could pick me up from the airport in his GTI. Oh boy. We'll see about it. We'll see about it. Maybe sometime in the future. Okay. Alright, I'm done. Thank you everyone coming to the live stream today. If you haven't liked the video already, like it. If you have any questions later, just put a comment down below in the video and I will kind of reply to you when I read the comments. Normally it takes a few days if I don't check the comments all the time because it doesn't notify me every time. Plus, yeah, just let me know. Yeah, thanks for coming along to the live stream today. I hope you liked it. The affiliation link is down in the description below. Once again, if you do want to look into Sharesight and if you enjoyed the starter plan, then if you want to go on to the more expensive plans where you actually have to pay, then use my affiliation link, because that will at least save you quite a bit of money for 4 months free for an annual plan. So just look into that. And yeah. Thanks, Stevo. Good night, and good night, everyone. And I will catch you later. Bye. Have a good week. Happy Monday. No, actually, depressing Monday. Who wants to